Imagine if you had a tool to predict the future. What would you use it for? Put a bet on the next World Cup winner? Invest in the next Amazon? Well, what if I told you that companies like Goldman Sachs and Google already have this tool, and it's called a prediction market? A prediction market is a place where participants can buy and sell contracts based on their own predictions about a future event, which can be anything from elections to stock prices and even weather patterns. The prices of these contracts are determined by the market, and they can provide valuable information about the likelihood of a particular outcome. For example, if the price of a contract representing a prediction that a certain politician will win an election is rising, it could indicate that more people believe that the politician will win. It's a valuable tool, especially when there's a lot of money at stake. However, prediction markets aren't perfect, and this is where blockchain technology comes in, which could potentially make predictions even more accurate. In this video, we'll be discussing the EOS network, the unique features that make it ideal for hosting prediction markets, and why EOS may well be used to predict the future. Dubbed as an Ethereum killer, the EOS network was launched in 2018 as an open-source decentralized blockchain platform based on the architecture of Ethereum, but designed to be more scalable and flexible to support the development and hosting of high-performance decentralized applications, dApps. The EOS ecosystem consists of three main components: EOS IO, the EOS blockchain, and EOS token. EOS IO is an operating system that provides developers with tools and resources for building dApps on the EOS blockchain, whilst the EOS blockchain is the blockchain platform that supports both public and private networks. One of the key features of the EOS blockchain is its use of a delegated proof-of-stake consensus mechanism, DPoS, to validate transactions and add new blocks to the chain. In a traditional proof-of-stake system, which Ethereum now uses, validators are chosen based on the amount of cryptocurrency they hold. This means that the more cryptocurrency a validator holds, the more likely it's going to be selected to validate transactions. Whereas in DPoS, validators are chosen for a voting process. Here's how it works. By staking EOS tokens, token holders can vote for up to 30 validators, known as block producers on the EOS network. The number of tokens that a holder stakes is proportional to their voting power. The top 21 block producers with the most votes are elected to produce blocks for the blockchain. Each block producer takes turns and is responsible for producing one block every 21 seconds. They are then rewarded for their work, and these rewards are paid in EOS tokens. If a block producer is not performing well or fails to produce blocks as required, they can be voted out by the token holders and replaced by another block producer. With a limited number of validators, it allows the blockchain to reach consensus more quickly, meaning faster and more transactions. EOS is able to achieve a theoretical 10,000 transactions per second, making it among the faster blockchains available on the market. Ability to handle a large number of users and transactions without experiencing delays or congestion, exactly what a prediction market requires to function effectively. As the market reflects the collective wisdom of the participants, the prices of contracts need to be updated in real time, so it can be used to forecast the likelihood of different outcomes accurately. By using smart contracts on the EOS blockchain, a prediction market dApp can enable users to create and trade on predictions. Unlike other native tokens, the EOS token is unique in the sense that it's not used to make transactions. Instead, it's used for economic activity, governance, and staking on the blockchain. There aren't any transaction fees for sending and receiving EOS. The costs are shared by EOS token holders through built-in inflation, which results from the DPoS consensus mechanism. There is no maximum supply, and new tokens are generated at a rate of up to 5% per annum. This means that each year, up to 5% of the total EOS token supply will be added to circulation. As mentioned before, new EOS tokens are distributed to block producers as a reward for their work in validating transactions, whilst token holders get access to a proportional share of system resources to the amount they've staked. So token holders keep their EOS tokens, but essentially pay for the cost through inflation as the value of existing tokens is diluted and spread over a larger total supply. No transaction fees can make EOS more attractive to users and developers, especially those looking to build dApps like prediction markets that require frequent or high volume transactions. On the other hand, the inflationary aspect of the EOS token could be seen as a negative for token holders, as they may see a decrease in the value of their holdings over time if demand doesn't keep up. In addition to voting for block producers, EOS token holders are able to see and vote on proposals that are submitted to the network. However, the EOS Tokenomics model is heavily weighted towards block producers, who receive a significant portion of the inflationary rewards. At any given time, only 21 block producers are allowed, which gives these block producers significant control over the direction of the network. In addition, the top 10 EOS token holders collectively hold nearly 80% of the overall token supply, which means that a small group of individuals or entities have a disproportionate amount of influence over the network. This centralization of power and control has led to concerns about the potential for collusion and the lack of accountability among block producers. It also makes the platform less attractive to dApp developers who may perceive EOS as less secure and more prone to censorship than other decentralized platforms. It's a key challenge that the EOS team will have to address if they want the platform to succeed. EOS was developed by a company called Block One, which was co-founded by Brendan Bloomer and Dan Larimer. The platform received significant investment from the blockchain community, raising $4.1 billion in its initial coin offering and backing from notable investors, including Peter Thiel's Mithril Capital Management and Bitmain, the largest manufacturer of Bitcoin mining hardware. Despite the early success, Block One was plagued with controversy surrounding its financial practices and mismanagement of the project. In 2019, the US Securities and Exchange Commission imposed a $24 million fine on Block One for failing to register the initial coin offering and for not providing token holders with the proper disclosures. The SEC also alleged that Block One had made false and misleading statements about EOS, which artificially inflated the token price and thereby violating the securities laws. This was further supported by a report later published by the University of Texas, which found that wash trading had been used to artificially inflate EOS token prices during the initial coin offering. In 2021, Dan Larimer announced his resignation from Block One. The former CTO was considered as the project's lead architect, a serial blockchain entrepreneur who was known for his work on several other blockchain-based projects, including Steem and BitShares. Larimer's departure further fueled speculation that the project was being mismanaged by Block One, and this strained relations with the EOS community even more, who were becoming increasingly frustrated with a lack of development work that was much needed to address issues of scalability, governance, and centralization on the network. The project saw gradual decline and struggled to attract adoption. With growing sentiment that Block One had abandoned the project, the community decided to take control under the EOS Network Foundation and voted to stop paying Block One for supporting the network. Larimer returned in 2022 to partner up with the community with the aim to revitalize EOS. It was announced that the EOS network would undergo a hard fork, and the upgrade would effectively give the community full control and independence from Block One. Many see this as a fresh start, and it's hoped that Larimer and the EOS Network Foundation will be able to lead the project towards a more decentralized future, addressing one of the key challenges facing the network. While the EOS network offers a number of potential benefits for hosting high-performance dApps like prediction markets, it competes with other platforms such as Ethereum and Tron. Ethereum is a well-established platform that has a large and active developer community and a wide range of tools and resources available, so it comes as no surprise that prediction market platforms have already been built on it. Comparing the number of dApps deployed and total value locked on each blockchain, EOS has a total of 21 dApps, with a TVL of just over $105 million. Comparing that to Ethereum's 571 dApps, with a TVL of $26.75 billion, EOS looks like a drop in the ocean, and it shows just how much catching up EOS has to do. Despite offering higher throughput and scalability, EOS has yet to achieve widespread adoption, and it may find it difficult to attract a critical mass of users and developers from Ethereum, where they may find more resources and support. Tron is often seen as a direct competitor to EOS, as both platforms use a DPoS consensus, but Tron uses more validators, and arguably, a more decentralized governance model. In the case of prediction markets, they need a reliable and trustless platform that's resistant to censorship or manipulation by a central authority. Participants have to be able to trust the accuracy and integrity of the data used in these markets for it to operate effectively, and if not, the market's prediction will be inaccurate. Hence why prediction market dApp developers may prefer building on Tron over EOS, considering it's more decentralized. To round up, decentralized prediction markets on the EOS network could be a powerful tool for making predictions about future events and outcomes. The EOS network's focus on scalability, low transaction fees, and support for high-performance dApps make it well-suited for the demands of prediction markets. Additionally, the use of delegated proof-of-stake consensus mechanism allows for fast and efficient transaction processing, which can be important for prediction markets that require real-time updates and information. However, EOS faces strong competition from Ethereum's established ecosystem, and a period of mismanagement has seen EOS struggling to gain widespread adoption due to a lack of development. With the separation from Block 1, there's general optimism that now a community-led approach will be able to address key concerns about centralization on its network. If EOS succeeds, we may see prediction markets being developed that could predict the future faster and more accurately than ever before. If you found this video useful, then be sure to drop a like, and if you want to learn more about the fundamentals behind other crypto projects, then hit the subscribe button and stay tuned for your next dose of crypto beans.